Understanding tax in Nigeria. The big picture. Let's be honest. When most Nigerians hear the word tax, the first reaction is usually, government again. Some people think tax is a scam. Some think it's only for rich people. Others think if they ignore it long enough, it will just disappear. But here's the truth. You're already paying tax, even if you think you're not. In this video, I'll explain what tax really is, why the government collects tax, and how tax works in Nigeria at a big picture level. No grammar, just understanding. What is tax? At its simplest level, tax is money citizens and businesses pay to the government to run the country. That's it. Government uses tax money to fund things like roads, hospitals, schools, security, public services. So tax is not supposed to be a punishment. It's meant to be a contribution. The problem is, most people pay tax without understanding it. And that's where frustration comes from. A lot of people say, I don't pay tax. But let's test that. Have you ever bought food from a supermarket? Paid for internet or cable TV? Booked a hotel? Used ride-hailing services? If yes, you have paid VAT, even if you're unemployed. Even if you don't own a business. Even if you've never filled a tax form, you've still paid tax. So the real issue is not whether we pay tax, but how much we understand what we're paying. Who collects tax? In Nigeria, tax is collected at two major levels. First is the federal government, through FIRS, Federal Inland Revenue Service. They handle taxes like company income tax, value-added tax, capital gains tax. Then we have state governments, through State Internal Revenue Services. They handle taxes like personal income tax, PAYE for salary earners. So depending on the type of tax, different authorities are involved. This is why confusion happens when people don't know who they're meant to pay. Another common question is, why are there so many taxes? Simple answer, not everyone earns money the same way. Some people earn salaries, run businesses, sell assets, offer services, buy and consume goods. So government created different taxes to match different economic activities. That's why income is taxed differently from profit. Consumption is taxed differently from investment. Selling land is taxed differently from salary. Different actions, different taxes. Overview of major tax types. Let me quickly introduce the 5 major taxes we'll be breaking down in this series. Personal income tax, PIT. This is tax on your income as an individual, especially salary earners. Company income tax, CIT. This is tax companies pay on their profit, not revenue. Value-added tax, VAT. This is tax on goods and services that consumers pay. Withholding tax, WHT. This is advance tax deducted from payments for certain services. Capital gains tax, CGT. This applies when you sell assets like land or shares at a profit. Each one works differently. Each one applies to different people. And misunderstanding any of them can cost you money. When you don't understand tax, you overpay, you underpay, or you get penalized. But when you understand tax, you plan better, you protect yourself, you stay compliant without fear. Tax stops being something to run from and becomes something you manage. This video was just the foundation. In the next video, we'll break down personal income tax versus company income tax, and finally clear the confusion between salary tax and business tax. If this helped you, like, subscribe, and share it with someone who still thinks tax is only for companies. See you in part 2.